It's a story about contrast. China and India have long been viewed as rivals in terms of global footprint, acceptability, and reach. Currently, the two countries in question are undergoing a differential economic curve that depicts a contrasting picture. Without a doubt, the economic stories of China and India are unfolding differently against the backdrop of a massive crisis in Eastern Europe and the Baltic region, with rising commodity prices causing massive inflationary pressures and central banks tightening monetary policy. 1. Prolonged lockdowns in various Chinese cities caused by the COVID-19 pandemic have pushed the dragon country's economy into a tailspin. China has lost its exalted position as the fastest-growing country as it struggles to maintain positive growth. 2. The decision by President Xi, the cabinet, the State Council, and the CPC to pump prime the economy speaks volumes about the crisis that has shaken the world's second-largest economy. The Ukraine war, disruption in supply chains, and subsequent decline in manufacturing growth have resulted in widespread pink slips and job losses. 3. With an 8.7% GDP increase in the fiscal year ending April 2022, India has surpassed China as the world's fastest-growing economy. In addition, this is India's highest growth rate in 22 years, following 8.8% in 2000. 4. With a $3 trillion economy, India is making waves around the world with new partnerships and markets, creating new job opportunities for the aspiring youth. After surviving the first two waves of the COVID-19 pandemic, India is working with partners such as Australia, Japan, and the United States to displace China with alternative and sustainable supply chains. 5. According to Chief Economic Advisor V. Anantha Nageshwaran, India's economic growth in the current fiscal year is estimated to be 7.58%. These projections may appear daunting at this point, given the 4.1% drop reported in January to March of this year. Domestic economic resilience and astute management are what can be relied on to realize this expansion. This reflects stalling growth in the world's three largest economies, the United States, China and the Euro area, with important consequences for the global outlook. 6. The IMF also stated that downgrades for China, the United States, and India are driving downward revisions to global growth in 2022-23. This reflects the manifestation of downside risks highlighted in the April 2022 World Economic Outlook. A sharper slowdown in China as a result of extended lockdowns, tightening global financial conditions as a result of expectations of steeper interest rate hikes by major central banks to ease inflation pressures, and spillovers from the Ukraine war. According to the UN Department of Economic and Social Affairs World Economic Situation and Prospects (WESP) report, which was released on Wednesday, the war in Ukraine has upended the fragile economic recovery from the pandemic, triggering a devastating humanitarian crisis in Europe, raising food and commodity prices, and exacerbating global inflationary pressures. 7. The global economy is now expected to grow by 3.1% in 2022, down from the 4% growth forecast released in January 2022. Global inflation is expected to reach 6.7% in 2022, up from 2.9% on average between 2010 and 2020, due to sharp increases in food and energy prices, according to the report. According to the report, the outlook in South Asia has deteriorated in recent months, owing to the ongoing conflict in Ukraine, higher commodity prices, and potential negative spillover effects from U.S. monetary tightening. 8. The regional economy is expected to grow by 5.5% in 2022, which is 0.4 percentage point less than the January forecast. India, the largest economy in the region, is expected to grow by 6.4% in 2022, well below the 8.8% growth in 2021, as higher inflationary pressures and uneven recovery of the labor market will curb private consumption and investment, the report said. 9. India's growth rate is expected to be 6% in fiscal year 2023. We expect Indian recovery to remain strong in the near term, in the next year and two, but again we cannot completely discount the downside risk that would come from external channels. So that risk is still there, said lead author and chief, Global Economic Monitoring Branch, Economic Analysis and Policy Division, United Nations Department of Economic and Social Affairs Hamid Rashid. It stated that, in addition to higher energy prices, rising food prices will likely increase food insecurity across the region. Consumer price inflation in the region is expected to rise to 9.5% in 2022, up from 8.9% in 2021. 10. Tighter external financial conditions, according to the report, will harm regional growth prospects, particularly for countries with high exposure to global capital markets that are experiencing debt distress or are at risk of default. Growth forecasts for the United States, European Union, and China have all been revised downward, with the European Union experiencing the most significant decline. The European Union's economy, which has been most directly impacted by disruptions in Russian Federation energy supply, is now expected to grow by 2.7% in 2022, down from 3.9% in January. If you enjoyed the video, give it a thumbs up. See you in the next video.